Hello YouTube, welcome to episode 10 of my Freetrade stock ISA portfolio update. So at the moment I've got £13,622 and 53 pence within the account, and I'm up £716 84 pence, which according to my calculation will probably be around something like 5.5% essentially. Um, so I have received three dividends so far for the month of May. First is AbbVie, which I received £9 and 89 pence. I have basically reinvested that into the account. I just basically bought £10 worth of AbbVie shares. And this was thanks to the fact, obviously, Freetrade, for those of you who don't know, have basically started offering fractional shares their um, on US stocks essentially. They haven't started doing it on UK stocks. They haven't really announced when they're gonna start doing that on UK stocks, but hopefully it's sometime soon. Um, Obviously you can get the service in trading if you want to, but yeah. I don't know why it's taking so long for Freetrade to do it, but at least they started, so that's a good thing. Also, I got dividends from Smith and Nephew this month, and it was £2.42 pence, and I got dividends from AT&T to the sum of £1 and 42 pence. So for those of you that's probably watched my last video, you would see I had some holdings which were quite high, or were higher than what you see now, like 3M and Disney. I've basically taken the worst case scenario type approach for my portfolio. It seems to be doing okay. I could have maybe been doing more or better than 700 at the moment, but I've decided to cut some shares from Disney, cut some shares from 3M, got some shares from Red Roll, Diageo. There are quite a few shares actually legal in general, just because I feel like those industries are going to be um, in the next earnings reports, that they're gonna not do very well, and that would basically trigger a drop in the share price, which is where I'll basically be buying in, depending on how the economic situation has actually improved. So essentially, be going through the I don't know top biggest movers and losers as well. So the first would be Palo Alto. So let's have a look at Palo Alto. Um, Palo Alto, and they in the last month basically they're up 23.86%. I've got 22 shares of that. I cut my holdings in Palo Alto. I had 4 shares before, now I've got 2 shares. It's one of those things I wish I could probably kept them, but I just felt like just had to de-risk it. But they basically came up with pretty good numbers, which signified a strong quarter, and the price target got changed from $240 to $270. At the moment, it's just about 240 basically. So I would expect this to go even higher essentially. Um, I might look to add one share basically. I'll see how the market does next week. There might be a drop again. I don't know, because there was a huge rise in the market, especially in the American market last week. So next would be Uber. Okay, actually before that, Palo Alto, I am up 61.44%. So that's pretty good. Uber, I am up 38.94%. I was really gutted when I didn't buy Uber at $14. I just didn't have money in the account. But yeah, in the last month they are up 22.94%. And the only news I could find about Uber was basically, they've basically done a job cut, or they're planning to do a job cut for 3,000 employees essentially, and due to the lockdown easing, essentially people will start using the Uber service a lot more, um, their ride sharing service a lot more. So that's looking good for Uber. The job cut thing is quite funny because you would typically sometimes you would see companies announce job cuts, like maybe HSBC, and that would literally send the company down. But HSBC did, have a bad quarter anyways. Um, yeah, so the market kind of responds differently to different situations. Responded positively to Uber, so that's pretty good. Next is BIFA or BIFA. I'm not too sure how to say that. So that's the waste management company. It's a UK company essentially. For me, it's more of a trading scenario. Um, I mean, the last month is up 21.40%. Um, I've invested in this company before, but I kind of noticed that around this level, um, it just tends to shoot back up again. I do have no idea why, but it's just one of those ones that I knew I could get. I could get in. I didn't put a lot of money into it. Just put basically, yeah, I don't know, maybe like 20 quid or something. How much was it? Yeah, it's not a lot of money basically, and just kind of ride it for a bit and then see where that takes me. Um, but I think it's kind of renewed my confidence in that level because that seems to be an important level for the stock. So if it does drop back down again, definitely be buying quite a bit and probably buy a bit more than usual, just for a quick swing trade. It's not really a company that I feel like I'd hold for a long time. Um, yeah. So next one is keywords. Um, so they're up 20.50 percent in the last month. Essentially, basically, yeah, analysts basically believe that keywords basically they've come out to say that there's been strong demand for their business over the pandemic. So analysts have basically increased their price from £16 to £17, which shows this optimism within the stock itself, which I believe has helped drive the stock higher. Because they did report numbers not too long ago, and it seemed not to people seem not to like it very much. The stock did drop, but not by much essentially. But it seems like there's renewed optimism for the stock, which is why it's gone up by 20.50%, and I'm currently up 22.67%. The next is RSW. So RSW is up 18.85%. Uh, Basically, I couldn't find any news as well for RSW, but to me, it's a good long hold. Deals with translational science, and it's got a really good balance sheet as well. So I think at the moment it's actually overvalued. Yeah, but I think it's definitely a growth stock to look into. Um, it's something that's kind of becoming more popular, I believe, in that industry. So that's it for the biggest gainers essentially. So we go to biggest losers, which is Countryside. That's the first one. So Countryside's down 32.44%. Um, Basically they reported numbers recently, and profits dropped by like 22 million. The debt, which also led to the debt level increasing, and they also reported that there were low level of orders during the lockdown, as expected. However, virtual demand for for viewings and things like that increased or were quite strong. Um, the stock is currently undervalued. I had this in my holding before. I sold it off and I bought back in literally within the space of, yeah, 2 days, I believe, I bought quite a few shares just to build my holdings in it, and this kind of triggered. This was the reason basically I reduced my holdings in Red Roll and so that's Red Roll there and Barrett here, because I believe they're gonna have the same. They haven't reported numbers yet, but I believe they're gonna have the same problem as well. And once the I took out some profits, and hopefully once the report hopefully drops back down, and I'm able to scoop quite a lot of shares for a cheaper price. So that's my strategy. I'm just trying to be as flexible as possible. I know people say buy and hold, buy and hold, buy and hold. I don't think this is really a buy and hold market at the moment. When is like a full on bull market, then it's a buy and hold. But I think for me now is just to try and be as smart as possible and keep my cost basis low as much as possible and just try and keep everything in the green. Yeah, that's basically my goal. And the last one would be, yeah, Coca Cola HBC. Essentially, lockdown thing as well, where there's reduced demand for the products due to the lockdown. Also, as things are easing now, hopefully demand would slowly creep up. Obviously, like bars and things like that are still closed, but just general, since the lockdown is easing, I would expect the demand to increase over time. So it's also undervalued as well. They got a good balance sheet, and it's Coca Cola. I think that for me, I prefer to play into this, mainly because the Coca Cola stock is a lot more expensive than the bottling company stock. So this is basically my play on Coca Cola. So that's about it. Obviously, I told you about my strategy, which is making my portfolio more cash heavy, and hopefully, if things if the market kind of crashes again, then I would have a lot more money to deploy into stocks. But if it doesn't, at the same time, I feel comfortable with the positions I'm holding, and yeah, I'll be able to catch the markets on the way up, anyways. So to me, this is a strategy that works for both situations, and I'm happy to follow this strategy. So yeah, so this is it for me, guys. Thanks for watching, and see you again sometime soon. All right, take care, guys. Bye. Okay, yeah, one more thing actually. Comment, subscribe, and yeah, like the video. So thanks, guys. All right, bye.